Hey everybody, happy hump day. It's Wednesday, we're getting there. So I'm a little energized this morning. You know why? Nothing to do with finance stuff. I was able for the first time in years to be able to take my dog to the dog park and walk with him for an hour. So why is that important to me? I had major foot surgery in December. A surgery I've put off, honestly, for over 20 years because of the recovery time. But I said, you know what? This is bullshit. I need to do it. So went ahead, did it. So worth it, guys. I can actually walk. It's the first time I've walked without pain in over 22 years. Incredible. So I'm energized. Let's go. Here's what's happening. Last time I looked, the Dow was up about 570 points. This is after going up 1,000 points yesterday. And remember, we've talked about 100, 200 here or there. I mean, that would kind of be seen as, big. But, with all the volatility going on, 1,000 swing up, 1,000 swing down. That's just what we're seeing. Now, why did this happen? I'm going to say a T word, but you can probably guess what I'm going to say. It's not tariffs. Trump. And then there's another person that we've been talking about, right? Jerome Powell. So remember how we said in the last podcast how Trump has been saying things like, Powell needs to go, all this other stuff. Well, yesterday at the White House, this is after market close, there was a swearing-in ceremony for, I think it's the new head of the SEC. I'd have to double check to make sure. But a CNBC reporter happened to be in the Oval Office for this ceremony, and afterwards was able to get in a question and ask the president, hey, are you really going to fire Jerome Powell? And Trump looked at him incredulously and was like, I'm gonna read the quote. He said, oh, I never did. Never had that view, right? I was never going to do that. Nope, never had that thought. None whatsoever. Really? Well, I can tell you in the past week, I think about a week or so ago, I don't know the exact day, and I'm going to read this quote again. When talking about Jerome Powell, Trump says, if I want him out of there, he'll be out real fast, end quote. All over the place. And that's what is happening in this market. So, two things. Excuse me. Everyone can have their opinion, right? On tariffs, on Jerome Powell, on our economy. Have your opinion. That's your right, man. I respect that. But can we maybe agree even a little bit that regardless of your view of these things, whether it's good or bad for the United States, the methodology and the way in which this is being communicated is not what we've seen before. It's not normal. And not only is it not normal, it's contradictory. So again, what does that do to our markets? They're all over the place. The VIX, we talked about the VIX. I think the last time I looked was at 68, 69. Way high, right? And people are like, oh, you know what? Take a deep breath, Amy. Just wait. Everything's going to be just fine. Well, I will tell you that I don't like this volatility. I don't like what's doing my savings. I need money on a daily basis to support my life. And when I look in my account, and granted, I have money in cash and that kind of stuff. But I look at my retirement or what I've saved because I'm self-employed. I am not happy because I have expenses every single day. And I look at what is in that account and I'm like, motherfucker. So it affects the average person. Who else does it affect, right? Investors, companies, they can't give guidance. And I'll talk about Tesla in a minute. Foreign governments, right? Companies are having to retool immediately. This isn't like everyone's sitting to wait and see, oh, I have 90 days, I'll just figure it out later. No, you have to react real time because this stuff doesn't happen overnight. And I read an article today about bringing back automotive manufacturing to the United States. How long does that take to build a manufacturing facility from scratch? 3-4 years. Why? 6 to 12 months for permitting. Maybe we could fix that a little bit. couple years just to build the actual facility itself, find the land, the building, everything else. But anyway, you're looking at 3 to 4 years. And how much is it? Again, it depends. But Hyundai just built a ginormous mega factory. I think it was like $12 billion. So folks, this isn't easy. It's not cheap. It's not overnight. So companies need to make other plans, and immediately, right? So we can say, let's wait and see for the dust to settle. We can see where these tariffs head, where they end up after the negotiations. Maybe it is a negotiating tactic, but I can tell you that real world harm and concern is happening immediately as a result. And that I'm not going to be patient with. Nor are other countries, nor other governments, nor other investors, etc. So I appreciate wait and see, let's see where this all settles. But that period from now until then, I don't like it. Companies don't seem to like it, which is going to bring me into my next one. Remember how I told you Tesla was going to report earnings yesterday after the close? Well, they did. I didn't listen to the whole thing. Hey, it's full disclosure, guys. Tesla, I knew quite well as a company and a business way early on. I've actually met Elon Musk. Probably doesn't remember me. That's fine. I don't care. Way early, before the company had actually even produced a car. So we had looked at helping them raise some capital. We didn't end up working with them, but that previous life, other story. So anyway, I've met him. I have a sense of his personality. In any case, I couldn't listen to the whole call. And plus, didn't I tell you that was your homework? So I'm not going to give you everything, because you know what that's like? That's like a parent doing their homework for their kid. And that doesn't happen in the Smith house. But let me give you a couple highlights that I think are important. Number one, they missed on top and bottom line pretty badly. What does that mean? Top and bottom line. So companies produce financial statements. One of them is the income statement, and that's the financial statement summary that shows how much revenue they made, what their costs were, what their net income was. So at the end of all the expenses and taxes, how much money did the business make? Top line refers to that top line on that income statement. That's revenue. Bottom line is the line at the bottom of that income statement, which is generally earnings per share, or EPS. So they take their net income, the bottom number, income available or after everything else, and they divide it by the number of shares outstanding they have. Okay? Shares are the little pieces of ownership that some people can own. Okay? And they get a number. Both of those missed dramatically, right? So revenue, $19.34 billion. They reported. The estimates were 21.1. EPS, earnings per share, they reported 27 cents. Estimates were 39. I'm going to back up again. What do I mean by estimates? So there are research analysts that are employed by banks. So, like Goldman, Morgan, JP Morgan, B of A, Wells Fargo, Fidelity even has their own. A lot of these banks will have what are called equity research analysts. And these are analysts that analyze equity stocks. And they usually have their specialty by industry. So whether that's tech, healthcare, industrials, energy, power, alternative energy, whatever, okay? These analysts put together their own financial analysis and financial calculations, models, future financials of companies that they cover in their research coverage universe. So they put together their own financial models. And when I say estimate, what that is that is an estimate, an aggregate average of that figure. So let's say revenue, of all the research reports out there that are done by all the various analysts, and it averages out what they say. So for example, revenue, 21.11 billion was the estimate, the average estimate by all these research analysts on the street for the first quarter, for March quarter revenue. So that's what I mean. When you hear estimates, that's what it means. What else was interesting? Well, they said they couldn't really talk too much about 25, the full year. By the way, we're in April. We're 4 months into the 12. third of the way there. They said they couldn't really provide that much now. They'll do that in June. So visibility, not awesome. What was interesting, too, is there was a lot of commentary by Elon about the tariffs and how it's creating volatility and uncertainty in the business. So that's interesting. The other little thing that I thought was interesting for folks is, there's a huge movement saying that we should be stopping incentives and credits, that kind of thing, for electric vehicles, alternative energy, all that kind of thing. Well, what's interesting is it's not just automotive that's in Tesla, right? There's energy storage and some other things. But the automotive business would have actually lost money this quarter if it were not for $595 million that they got from environmental regulatory credits. Interesting, right? I'm not going to overanalyze it. You can put that in your pipe and smoke it and figure it out, right? But that's all I'm going to say on Tesla. But it would be interesting. You can actually get the transcript where they type out, sometimes they make really funny grammatical errors, but that's the nerd in me. But you can get the transcript. Just type it in, Google it, Tesla March quarter earnings transcript, and you can actually just read what was said during the call. It's pretty interesting. And what's even more interesting is not just the results, but at the end, these equity research analysts are able to ask questions of management that maybe management didn't cover in the call. Very interesting. All right, so where does that lead us? I don't know. I mean, kind of the same, right? Volatility all over the place. Oh, let me back up. Tesla stock actually went up yesterday. You're like, Amy, that makes no sense. They missed on revenue, they missed on EPS. Well, it's probably hard to say that people are surprised by their performance, but what happened? It was after the market closed that Trump made those announcements about Powell. And in a weird, strange way, Tesla stock went up as a result. There's like these weird linked lines, right? Like dotted lines between Doge, Elon Musk, Trump. It's kind of messy, right? But that's the reason I think Tesla stock's up 20% today. It's just crazy. So a lot of things are happening in the market, to me, that aren't based on basic fundamentals, based on external factors, crazy communication sideways all over the place, and I feel like that is a lot of what is happening in our markets. It's not necessarily that there's a crumbling of the economy or unemployment is out of control or growth has stagnated, the traditional things. It's these weird I don't want to call them third party, but like outside influences, basically communication from the administration about what is going on or what's not going on, and conflicting information. So, there we go. That's it for today, people. Hey, get outside. Enjoy it. I will tell you, I am reinvigorated. I also have had a lot of coffee, so that could be the pep in my step, too. But, again, educate yourself, dig deeper, understand what's going on. Hey, nerd it up with me. I love it. Thanks again for all the support, everyone. And, by the way, the podcast is launched on Apple Audio only, but it's there and it should be Spotify soon. And we have a YouTube channel. All of it is under Educate, Don't Hate. So check it out. Share it with your friends and family. I'd appreciate it so much. And, again, thank you for everything. Enjoy your Wednesday. We're getting there, folks. Ciao.